And with that, the 2025 season comes to an end.
Okay, everyone, we made it to the end of 2025. And I don't know what this year was like for you, but I know for me, it felt like if at Thanksgiving you decided to have 4 helpings of mashed potatoes, when you know that's a horrible idea. And then after dinner, every around like 68 seconds, your body reminds you, yo, that was a really horrible idea. But I'm excited to see what next year brings. So let's talk a little bit about what happened in the mortgage world and housing world this year. Because if you have watched the news or have an iPhone or have TikTok or have Instagram or anything that's going to flood your brain, you more than likely heard about mortgages and houses, and it's all very confusing, to be honest. So, again, if you watch the news or followed anything about the housing industry this last year, it probably was very up and down. You saw news articles that housing prices plummeted. You saw news articles that housing prices actually went up. You saw news articles that housing prices stayed the same. You saw articles that the housing industry is crashing completely and we're all just falling into a black hole, which may be partially true, but whatever. Same thing with interest rates, right? You would have seen articles and news stories of interest rates are at the lowest they've ever been. Interest rates are at the highest they've ever been. Why aren't interest rates coming down? So the news can be a source for mortgages and the housing industry, but always keep in mind it's a little skewed. They love their doom and gloom, and they are typically pulling data that is old, like months and months old. So let's talk about what really happened. And then in the next video, we're going to talk about what could happen next year. Okay, so let's start with just housing prices. Like I said, I saw a lot of articles out there and a lot of people talking about how housing prices have dropped and they're the lowest they've ever been, and people are losing equity. And it really depends on your area. So I'm going to talk about South Carolina and the Charleston area because that's where I primarily do my loans, but I can also do North Carolina. But it really is going to be area dependent. So we did see some areas like New York that did see a pretty good drop in their average sale price. But I will tell everyone, really keep in mind when they're talking about the drop, a lot of times these news articles are actually talking about what the original list price was versus what the house actually sold for. And yes, a lot of states and a lot of counties did see a drop in that original list price on the home versus what it sold for. However, as a consumer, all you're really concerned with is what the average sale price is in your area. That actually went up for many, many areas, as it typically should, just in general. So, for example, for Charleston, we did not actually see a decrease in our average sale price. We actually saw an increase. Some areas of Charleston as much as 6 to 10%. So, while the original sale price versus what the house sold for may have been lower, keep in mind sellers know a couple of things. They know their houses over the last year and a half will likely sit on market for longer because there's not as many buyers. They also know the buyers who are out there are going to want to negotiate more because it is technically a buyer's market. So we have a lot more buyers coming asking for price reductions, asking for seller concessions, which help cover closing costs, but that also comes out of the seller's proceeds. So you kind of get this Facebook marketplace approach where if you have something to sell on Facebook marketplace and you're moving and you need it gone today, right? You're going to put it bottom barrel pricing. You just want it out. You got to get out of it quickly. So sellers who have to move really quickly or the house is paid off and they just want to get out of it, they may have already priced homes lower than what their competitors would down the street. However, same Facebook marketplace theory. If you've got something you're selling, it's sitting in a spare room, you don't care when it goes, just at some point you want it sold, you're not going to list it for the lowest price because you already know everybody on Facebook's like, can I have it for $1? And you're like, no, I know what I got here. So, same thing with houses. Sellers who can be in their house for a while or don't have to move out immediately, a lot of them will start at a higher price point because they know, again, that the buyers are going to come in, they're going to want to negotiate, they may ask for a lower price, they may ask for concessions, so that way they still net as much as possible. And they know as long as the house can appraise from a lending perspective, we're all Gucci. So what we did see was that drop from the original price to what the houses sold for, because again, a lot of them were priced higher. We also have a lot of sellers that just don't get it, what world we're in right now. So they wanted to list their house a lot higher because Mark's house down the street sold for $2.4 million and his house was beige and mine is blue. So mine's worth 8.5 million, right? So we did see a lot of sellers still wanting to price their houses high, and then they ended up having to negotiate down. But again, as the consumer, you're really concerned about what the average price is in your area, because that's statistically about what you're going to end up paying. All right, let's talk about the second part. Everybody's favorite, interest rates, and what happened with interest rates this year. So same thing. We saw a ton of news stories. Interest rates are the lowest they've ever been. Interest rates are the highest they've ever been. Why aren't interest rates coming down for mortgages? So interest rates at the beginning of the year were on average around a 6.9. So everyone was really pissed, and rightfully so. It made affording a house nearly impossible. So did interest rates come down this year? Yes. Did they topple down to the lowest they've ever been? Well, ever? No. Lowest they've been in the last couple of years? Yes. So we're wrapping out the end of the year in the low sixes, somewhere depending on your credit, DTI, type of house you're building, between a 6 to a 6.3 on average. Okay. Depends on your situation. So do we have the lowest rates ever? Yes. If you're just looking at the last 2 years, yes, we've made significant progress in interest rates coming down, which always helps with affordability. However, keep in mind what just went up over the last year, the average price of a home. So interest rates trickle down, but home prices for a lot of areas continue to go up. So you lose a little bit of that leverage there. And also going from a 6.9 to a 6.2 is not saving you $1,000 a month. It does save you money per month, and it is very helpful, but it's not like you're running out here Kim Kardashian style from a 6.9 to a 6.1. Many buyers, when I talk to them, they're still very interest rate concerned. The interest rates they're looking for to get to the payments that they want with current housing prices would be in the threes or fours. So we have had a lot of education and discussions with buyers of, look, this is what the average mortgage is for your area now. Interest rates aren't just coming down really quickly. So what happened with all the interest rate promises, right? Because everybody knows at the beginning of this year, we were promised the same thing we were promised last year by the Fed of, oh, we should have 4 rate cuts this year. Okay, thanks. We got 1, 2 at best. And those rate cuts were very small at the time. So a couple of things to keep in mind. The Federal Reserve hates us. Just kidding, kind of. The Federal Reserve, when they're talking about rate cuts, is truly talking about inflation rate cuts. So that's the inflation rate that you pay for buying groceries, for getting Amazon things shipped to your house, buying your stuff on Shein and Temu. Those are more for goods and services. That's what they're really talking about when they say we're going to have rate cuts and when they say we're going to have a 50 basis point rate cut. So in the mortgage world, basis points are a percentage of your loan amount. So quick girl math here, 50 basis points is 0.5% of your loan amount. 100 basis points is 1% of your loan amount. 150 basis points, you got it, 1.5%. We could go on forever, right? So that 50 basis point is 0.5% technically, and reduction on our side. So if you've watched one of my previous videos where I explained the Federal Reserve using Mean Girls, highly recommend you go back and watch it. It explains how the Federal Reserve is talking about national interest rates and how mortgage rates are different. They're two different people at the table. However, they typically get along and they want to go to the same restaurant, but not all the time. Last 2 years has shown that they do not always flow side by side. You can have a reduction in national interest rates and nothing happen with mortgage rates. You can have the opposite. National interest rates go wonky and mortgages go really well. Just really depends on the stock market and the bond market that's driving those two. So we did not see a massive rate reduction this year, but we saw a good rate reduction. And if you don't think it's a good rate reduction, I'll be honest, you don't look at mortgages every day like we do. It is a significant reduction in overall payment to help affordability. Is it where we want it? No. Are we hopefully getting there? Hopefully. But keep in mind, every year we've been promised these 4 rate cuts. We get 1 to 2 at best. So, I don't think you have to be a psychic to kind of predict what's coming in the next video about next year. So key takeaways. Some housing prices went down in some areas. Some housing prices went up in some areas. Really depends on where you live or where you're moving to, but don't assume they went down. Interest rates did, however, go down from the beginning of the year, and they are the lowest they've ever been from the last couple of years, technically. And as a reminder, what I say constantly, the waiting game does not help you. The only person that benefits from you waiting is your landlord. If you have any questions, reach out, send me a message, and I will see you in 2026.